What if I told you that a decision made in Beijing today could impact your retirement savings in New York tomorrow? Or that an oil deal between Saudi Arabia and Russia could spike the price of your morning coffee? Welcome to the world of the global economy, where every dollar, yen, and euro is part of a much larger web of trade, finance, and power. Let's hit the subscribe button as we get to break it down. The structure of the global economy can be quite complex, but let's simplify it a bit. One key aspect is the division of labor. Countries often specialize in producing certain goods. For instance, Germany is known for its automobiles, while China excels in electronics. Take Apple's iPhone, for example. It involves over 200 suppliers across 43 countries. Then, there's the concept of comparative advantage. Ricardo's theory essentially states that countries should produce goods they can make most efficiently. Modern-day examples include Vietnam, which is emerging as a new manufacturing hub, capitalizing on its low-cost labor. Specialization is another crucial element. It increases productivity, but also creates dependencies. The COVID-19 pandemic revealed the vulnerabilities of over-specialization when global supply chains collapsed. Now, let's talk about the building blocks of the economy, the factors of production. First, we have land. Natural resources form the foundation. Oil-rich Middle Eastern nations like Saudi Arabia dominate energy markets. In fact, Saudi Arabia controls over 15% of the world's oil reserves. Next is labor, the human capital that drives production. India is a prime example, rising as an IT hub thanks to its highly educated workforce. By 2030, India's labor force is projected to become the largest in the world. Finally, we have capital, financial assets and tools that enhance production. Countries like the US and Japan excel in capital-intensive industries, such as technology and automobile manufacturing. Did you know that the US stock market accounts for over 55% of global stock market capitalization? How do nations organize production? Through firms, industries, and markets. Multinational corporations play a significant role in shaping global trade. Companies like Amazon and Toyota create extensive global supply chains. Apple, for instance, had a market cap that exceeded $3 trillion in 2023. Industries are networks of firms producing similar goods. The global automotive industry, for example, is now shifting towards electric vehicles. By 2030, EVs are projected to make up 28% of global car sales. Markets connect producers and consumers through global trade networks. The 2008 financial crisis is a stark reminder of how interconnected these markets are. A housing crisis in the US led to a global recession, affecting economies worldwide. Money and banking are, quite frankly, the lifeblood of the global economy. The US dollar, for instance, serves as the global reserve currency. 60% of global reserves are held in US dollars. However, we are seeing de-dollarization trends emerging, with nations like China and Russia promoting the yuan for international trade. Now, let's talk about banking. Banks play a crucial role in facilitating global trade and credit. Central banks, such as the Federal Reserve, shape the global economy through monetary policy. The Federal Reserve's decisions on interest rates, for example, ripple through global markets, affecting everything from stock prices to mortgage rates. Credit is another vital component. The availability of cheap credit can fuel economic growth, but it can also lead to bubbles, as we saw during the 2008 financial crisis. It's a double-edged sword that needs careful handling. Globalization, well, it's a double-edged sword too. Free trade has undoubtedly lifted millions out of poverty, but it has also contributed to job losses in developed economies. This has led to a rise in protectionism, as countries try to shield their industries from foreign competition. The World Trade Organization, or WTO, faces the daunting challenge of regulating global trade. The WTO has often been criticized for favoring wealthy nations and being slow to resolve disputes. Then there's the Bretton Woods system, established post-World War II. While it did stabilize the global economy, it also entrenched the dominance of Western financial institutions like the IMF and the World Bank. It's a complex web of benefits and pitfalls. Looking ahead, the future of the global economy presents both challenges and opportunities. Technology, for instance, is set to reshape global trade. By 2025, 25% of global GDP will be driven by digital economies, including blockchain and AI. Climate change is another significant factor. The shift toward green energy will have a profound economic impact. Take the EU's Green Deal, aiming to make Europe carbon neutral by 2050. This ambitious goal will reshape industries from energy to transportation. Geopolitical shifts are also in play. The rise of China and India is changing the landscape of global trade. As the US and China compete for global dominance, emerging markets like India and Brazil will play increasingly important roles. It's a dynamic and ever-evolving scenario. Thank you for watching. We've journeyed across continents, industries, and economies to unpack how this intricate machine, called the global economy, works. If you found this breakdown helpful, don't forget to subscribe and share with your friends. The world is changing fast, and Mawaki Insights will be here to help you navigate it all.